Hello, everyone. Hope you guys are doing well. I'm sure you guys are indeed doing well. However, I do say that there is one company that's not doing well, and that is the company that is called Citigroup. Now, I was reading an article discussing how Citibank is going to proceed to cut off a lot of its workforce. I believe it's going to be up to 10%, etc. But that's not just going to be the main issue of this video. The issue is going to be overall how the banking sector and financial sector is going to overall decline in the coming months, particularly, I'll say either quarter four for some companies or quarter one. So let's begin. I I shouldn't say but for past couple of years, let's say post 2009, we've had extremely low interest rates, and it was really a decade of easy money. Then once the pandemic hits, you see that we have the Fed flush the economy with outrageous amounts of dollars to the point of cutting the interest rates near towards zero. Now, of course, because you have so much money being printed, it's really easy just to acquire all that money and inflate your company. And that's exactly what happened. Tech companies, they're getting some money because, that's where a lot of people keep invested in. Value companies, they're even going up, etc. And who exactly are giving those loans out? Well, it's the banking sector, it's the financial sector, etc. So you're looking into the pandemic, after the shutdowns, all those stocks just kept increasing, and increasing. Now, come about 2 years later, really 1 year, but let's say 2 years later, when everything is coming back, the Fed starts raising interest rates. Now, the problem is that many of these banks who take depositors' money and then invest it in bonds, they start to realize that, we actually got to come in and pay some money back once we see a lot of depositors try to, withdraw their money. That's why you saw in March, right? You had SVB, Silicon Valley Bank, just, collapse overnight. Now, why is that? I'm not going to go too much into details, but essentially you had a bank run where a lot of people were told that SVB was insolvent and that you should hurry up and get your money out that said bank. Because of that, other banks had declined in stock and value, as well as other tech companies. Now, if you had, under 250K, then you're mostly fine. It's no problem. But if you're a tech entrepreneur, you have a business and it's in Silicon Valley Bank, you're not just doing $250,000. You're doing a lot more than that. And once that failed, and quite frankly, you have more than 250K, you could basically kiss your company goodbye, which for a lot of companies, it happened. So what does this have to do with you? Well, the fact of the matter is the world, particularly the United States of America, is run by credit. People want to use money that they don't have now and decide to pay for their expenses later. So you have $1,000 credit line, use $1,000 now, and you pay the full price or some of the price down later on. That's essentially how our system is run. Now, the problem is that what exactly happens when not enough people can get credit? Well, basically the system starts to collapse, right? The system starts to, break. It starts to hurt itself, yada, yada, this, that, and a third. Now you could argue and say, hey, you know what? The Fed could come in and do the same thing again. Well, that's the problem. Because you do that, you're going to have massive inflation, which that's what the Fed is trying to combat right now. So, how does this work with your business? Because at the end of the day, Each Sense Talk is an economic empowerment channel, and its main job is to help you become what? Economically empowered. And that's exactly what I wish to do for you. So, number one, let's say you're starting a business right now. Okay. You want to try your best to acquire as many loans and startup capital as possible right now, because many banks and financial institutions are going to become more stringent on their requirements on who gets capital. Why? Because they're going to have a hard time trying to get money from the Fed as well as other banks. So you look at the Fed funds rate or discount rate, etc., you'll understand what I'm saying. However, you face more stringent requirements. That's just one thing. Number two, along with those more stringent requirements, capital will be harder to acquire because, well, a lot of people are going to be broke, a lot of people are going to be poor, and it's going to be for your benefit that you're just starting right now, around Thanksgiving, around Christmas, so that you can make more money and create and generate as much income as you possibly can. Because let's say, what month should I say? Let's say February of next year, right? You see a huge downturn in the banking and finance sector. Well, if that happens, every other sector of the economy is also going to be impacted. Why? Because believe it or not, even though you may be flush with cash, with plenty of your income, for many businesses, it's better for them to acquire loans, acquire capital to facilitate their business expenses and transactions than using their cash on hand. Now, with the downturn in the finance and banking industry, you're going to have a problem where, as I said, capital is going to increase at a high level. It's going to be expensive to acquire that capital. So you're going to have less businesses applying and trying to get said capital. So you have a decrease in demand for said supply of item, in this case, the credit. And then it's going to be a feedback loop where banks are trying their hardest to do what? Increase their reserves and stay solvent. Because right now, what's happening is that you have a lot of banks across, let's say, the United States of America, particularly regional banks, that are collapsing. I believe this year we've had like 5 banks collapse. I could be wrong about that, but I know it's around that number. And even during the height of the pandemic, we didn't even have banks closed down at that high number. So if we see this situation where we have banks, becoming insolvent, that's going to reach the news. And then other banks, they're going to start to lose value, lose some money, etc. And if it's the big banks who lose out, and let's say they lose some money, like a JP Morgan Chase or a Goldman Sachs, etc., that's going to look bad on all the banks. See, a regional bank could collapse and it's going to be a small negative value on all the companies. However, if a big bank, and I don't believe they're going to collapse, but they decrease in value, it's going to be pretty bad for all the other banking institutions to try and become successful and make more income from their own services. And then the whole banking and financial industry will decline. And then more people are going to lose out, right? So that's all I got to say. If you have a business or not, get one so you make some more money and try to get income before this whole thing just, I wouldn't say implode, but we get into the downside of things. That's all I got to say. Take care.